The stock market, it really hasn't been this bad since maybe 2020 when it kind of came down during the COVID kind of little crash going on. So a lot of things are happening, and you know what? That could be scary. But one of the good things that can happen is a lot of stocks and ETFs are on sale. So that means if you've been sitting on cash, maybe stashing it away for maybe a rainy day, or you're like a squirrel that, you get out and it's winter time and you're looking for those nuts, it is time to kind of find those deals and start to buy some things. In today's video, I'm going to be talking about 5 ETFs that I am buying or looking at to buy right now. And at the end of the video, I'm going to have one bonus ETF so you can stick to the end to see what that last ETF is. Hey guys, my name is Steve, and I run the Frugal Expat, which is a website that tries to help people to save more and invest better. And who doesn't like that? Now in today's video, like I said, I'm talking about 5 different ETFs that I am looking at to buy. And this is just a great opportunity because I am accumulating wealth. I am looking towards the future on seeing if I can retire early, or even just stack some of those bills to continue to grow my income. All right, now let's get to it. Now my first ETF is one of my favorites, and that is VTI. Now VTI is the Vanguard Total Stock Market Index ETF, so it's got all the companies on the US stock market in this ETF. Now the reason I like VTI is because it is one ETF that I could buy and hold forever, and I really don't need to buy anything else. It's a great solid ETF that matches the entire US stock market. So if the stock market does go down, well, of course VTI goes down. If it goes up, well, of course VTI goes up. Now, if you look at it between VOO and VTI, they overlap about 87%. Now VTI has mid caps and small caps. And right now, the reason I like it is because most of my portfolio has a lot of VTI, and I also have some growth and dividend ETFs as well. So VTI is down about 15.89%, and that means, like I said, it's on sale. It's a good time to buy because the market may be down today here in April, but it could be back up maybe in October, November, or maybe in 2026, 2027, or even 2028. So right now it's just a great time to kind of buy some stocks when they're kind of down. And so if you have some cash, look at some of your favorite places, maybe some things that you have been thinking about, oh, it's a little too expensive, but right now it's a lot cheaper. So that is the reason I am buying VTI. All right, let's go on to number 2. Now, number 2 is one of my other favorite ETFs, and that is VGT. Now, VGT is the Vanguard Information Technology ETF. In it, because it's in tech and predominantly like a lot of tech, it is down about 24 to 25% year to date. Now this month has not been so good for the tech market. Apple is down maybe 32 to 33%. You've got Nvidia down, and you've got Amazon and Google, but Amazon and Google are not part of VGT. But you will have a lot of Apple, you'll have Nvidia, you'll have Microsoft, you'll have some great technology companies, maybe some Visa and Cisco. These companies are part of VGT. So if you wanted to buy maybe just 1, 2, 3, 4, or 300 different tech companies, VGT could be the ETF that I could be looking at. I've already added actually some VGT recently, and it keeps going down. So it's like if I stop adding more, it's because I ran out of money. So VGT has also been through some of the ups and downs of the market. It's been around since 2004, so it's seen the up and downs of the COVID crash. It's seen the up and downs of the GFC, and now it's seen the up and downs of the tariff trade war. So, is it a great ETF to buy? Yes. If you're looking for tech and growth, and you're looking for a good ETF that you maybe have keeping your eye on, VGT is a great one to add to your portfolio. It's part of my portfolio, and that's why I am looking at it. Now, another growth ETF that's got some companies like Amazon and Google, like I mentioned, that is not in VGT, but this ETF is a little bit more diverse, is number 3 on my list, and that is SCHG. Now, this is the Charles Schwab Large Cap Growth ETF, and one of the reasons I like it is because it's quite diverse. Now, it's got 45% in tech, so if you want that tech exposure, it's got it. If you want exposure to other different industries and sectors, it's got it. Now, another reason that I like SCHG is because it's got Amazon and Google. Right now, both of these are trading pretty low. Now, Amazon is a great company because it's got several different income streams. It's got cloud, it's got video, it's got MGM, it's got, well, of course, Amazon, where you can buy things. And this is just a great platform and a great place that is creating and doing some good works. And Google right now is another great one. Everybody uses Google. Now, you may not be a Google fan of using Google. Maybe you're a blogger and like, oh, it's hurting me. Or maybe, like me, I've got a Google phone. So Google's got a lot of different products. It's got a lot of different things that it's created. And right now, it is at its lowest point since 2020. Now, in valuation. So if you're looking for a good value tech company, that's kind of an oxymoron almost. Google has it. And its PE ratio is anywhere between 13 to 16% for the forward looking, and it's a great value find. But here's the bad part about Amazon and Google. Their stock price is between 147 to maybe $200+. And you're thinking to yourself, I don't have that much money. Well, that's where SCHG comes in. Now, SCHG is sitting at anywhere between $22 and $23, depending on when you watch this video. Now, the good thing is it's because it's down maybe 20% year to date, and it is a great pickup. Now, if I just had $200, I could pick up almost 10 shares. Well, I could pick up 9 shares. That's great. That's a great way to start building up kind of that growth part of your portfolio. If you got 20 years, well, 20 years is a long time, and it's a good amount of time for the market to go back up to all-time highs and to restabilize. And so SCHD is a great pickup right here. It's got a cheap price, it's well diversified, and it's got a lot of great companies that are down in value. And so that means when they go back up, SCHD will also go back up. All right, let's get on to our next one. If we're looking for more stability and more income, our next one fit that bill, and that is SCHD. Now, SCHD is the Schwab US Equity Dividend ETF, and a couple of days ago, I made a video about the best dividend ETFs to buy and hold forever, and SCHD is one of the best. Now, this ETF is down about 9 to 10% year to date. Well, everybody's down, mostly. And the dividend yield is sitting at about 4.17%. Now, that's great news to you. If you're looking for a great dividend ETF that's paying pretty well, well, SCHD fits that bill. Now, it doesn't have a lot of tech. It's got a lot of energy and consumer defensive, creating a good 40% of this portfolio. That means if you are looking for maybe a dividend ETF that's got a little bit more tech, well, that's going to be down a little bit more, and it's going to have less dividends. This one right now is kind of shed some of the financials, and it's right now in energy, and people are going to want some more energy, and the people are always going to buy consumer stuff like Walmart and Procter & Gamble. These are some things that are in this ETF. It's got a great dividend growth rate over the last 10 years, which is about 11.3%. So that means it's continuing to grow its dividend, and it's got a great price right now. I mean, think about it. I mean, if you were buying it about maybe a month ago, it was a little bit more expensive, and now it's cheaper. It's down 9 to 10%, so that means you can get it for a good deal, and when it goes back up, well, you're winning. That's great. All right. Yeah, our next ETF is a little bit more stable, and this one is VGLT. Now, VGLT hasn't been talked about on this channel as of yet, but it is in my portfolio, and I'm looking to possibly add a little bit more. Now, VGLT is the Vanguard Long-Term Treasury Fund ETF. Oh, that's a long one to say. Now, VGLT is, like I said, it's a treasury bond ETF. And so people right now are looking for stability. They're looking for safety. And so they're pulling their money out of equities and putting it into bonds and treasuries. And so that's why I've got this one right here. Now, year to date, it's up about 1.3%. It's got a dividend yield of about 4.27%. So that means it's got a pretty good dividend yield. It's actually increasing in value over this last year compared to all the stocks. And it's even got a dividend growth rate of the last 3 years of over 14%. Now, that's amazing news. I mean, it's grown its dividend over the last 3 years, not 5 or 10 years. Pretty good. I mean, 14% on the average of the last 3 years. That's pretty good. But the reason I like VGLT is if you are looking for the possibility of having some stability, this could be one of those ETFs. I mean, it's got stable income. It's going to go back to the mean. So when markets crash, people are going to go into bonds and the price raise. And when markets are in bull runs, what's going to happen? They sell out the bonds and they start going going back into equities and the price comes back down. And when inflation is up, they're going to have higher interest rates, so the interest rate's going to go back up, and it's just going to be back and forth. But it brings stability. And if you're closer to retirement, you may be looking for a stable ETF, a stable Treasury bond, or even other bonds that provide stability, provide income, and it probably won't crash and burn if the market does. So that's something good for you. And that's why I'm looking at VGLT. Now, I don't have much in it. I probably have like $1,300, and it makes up maybe 0.1% of my portfolio or less. I haven't looked at the numbers yet, but I digress. So this is just a great ETF to add to your portfolio. All right, now I did 5 ETFs that I'm looking at possibly adding to my portfolio. And there is one bonus one that I said I would talk about, and that is AVUV. Now, AVUV is the Advantage Small Cap Value ETF. Now, this ETF is all about small caps and value. Now, this ETF is actually the only managed fund on this list, and it's a little bit different. It's been around for 4 to 5 years. It tracks small cap value companies. So basically, if these companies are smaller, they're not going to be in the S&P 500. They're not going to be large cap, and they're considered small cap. Now, these are companies that you may have not heard of, but in maybe 10, 15, 20 years, they're going to be the largest companies in the country, as it could be. And so that's where you get your money from. In the past 100 years, small cap companies have bypassed the S&P 500 on average per year. So they're a better performing asset than the S&P 500. Now, if you take a look at the past, right now, small caps are down maybe 22%. And if you look at it, and you compare AVUV versus the S&P 500 in total return over the last 5 years, I know 5 years isn't that long, you'll see that AVUV is doing 60% better in those last 5 years. That's amazing news. It has probably have some bad years, and it's got some good years, but overall in those last 5 years, it is doing much better than the S&P 500. That's why I put it on this list. Now, since small caps are kind of cheap right now because people are selling out and you never know what's going to happen, these tariffs are probably hurting more small companies than others. The ones that will survive will be the ones that you'll see in the next 10, 15 years that are booming. Just like the dot-com crash. Dot-com crash you saw Netflix, Amazon, Google, and a lot of other companies that survived, and now they're some of the top companies in the world. So that's what AVUV can offer. All right. So those are some great ETFs to add. Now, let me know in the comments, what ETF are you looking to buy? What stock are you looking to buy? Let's discuss it, and I'll see you in the comments. All right, you take care, and I'll see you later.